end. We're joined now by Charles Ortel, Managing Director at Newport Value Partners, and we have John Licata. He is the Chief Commodity Strategist at Blue Phoenix, also the editor of Commodity Chronicles. Gentlemen, good to have you. Charles, I'm going to take a step out here. You're still bearish on what's going on in the market. Let me guess.
I'm bearish on equities, bullish on gold, precious metals, always an optimist. But
how do you reconcile that? You keep telling us that you're an optimist, but I've never heard you be optimistic about stocks.
Well, I just think at the moment there's an enormous gap between the traded value of most equities and their intrinsic worth, what Warren Buffett likes to talk about. And investors are comforted by the fact that alternative investments offer such a low yield. They're content to play around getting 2% a year in a stock.
Yeah, but gold doesn't provide you any yield, so you can't use that argument when you compare it to stocks.
But there's a trend shift going on now amongst major central banks and sophisticated investors around the world looking and reevaluating what is truly a riskless or risk-free security. And where it used to be okay to buy government bonds, 10-year bonds, let's say in U.S. government debt or other countries that are engaged in redistributive income and wealth policies, now I think that makes no sense whatsoever. And so you're seeing a slow and steady reallocation into things like precious metals and away from these government securities.
John Licata, what's your take on where capital is flowing? Is it going to be flowing into things like precious metals because people don't believe in the intrinsic value, as Charles describes, of things such as stocks?
Well, to a degree, I very much agree with Charles, but I would think that, in terms of the risk-free rate, I think that's a questionable topic in today's society. I think the price of gold has been pushed forward by a lot of central banks already looking into the price of gold. We saw silver prices rally for the same rationale. So it's my view that longer term, I do agree. I think the trend is still higher. But I think from the short-term perspective, I think many momentum players that were looking to have an asset allocation shift away from equities into commodities vastly already, in my view, already been in gold, been in silver, platinum, and palladium. And I think there's a reason to think that a pullback, if you wait for a pullback, as we talked about on your radio program about a week ago, maybe a pullback could be a healthy way to get back into some of these commodities that I do agree, longer term, I think the trend is intact.
Yeah, but if you had done that with silver and you had decided to go with the trend, you'd be licking your wounds right now, right?
Well, if they would have listened to you when I speak on the radio program, you would have, from last year when silver prices were a teenager and when they recently rallied toward $50, if you remember, I said right. I think the time is now to get out because I think it was way too much. I do believe silver can replace copper as an industrial metal, more so than copper has been historically. But I do think that the recent trend gives reason for pause.
Oil executives, they were on Capitol Hill defending tax breaks and subsidies that many Democrats are trying to repeal. Just take a listen to Chevron's chief executive, John Watson.
Don't punish our industry for doing its job well. Create energy and tax policies that make our country a more attractive place to do business. Allow us to develop our nation's vast energy resources and strengthen, don't weaken, our ability to compete against large national oil companies who are major players in the U.S. and global energy markets.
John Watson, chief executive of Chevron, testifying today before Congress. My guests are Charles Ortel, managing director at Newport Value Partners, and John Licata, chief commodity strategist at Blue Phoenix, also editor of Commodity Chronicles. Charles Ortel, I saw you shaking your head as you were listening to John Watson speak about the oil industry. Why?
Just watching the spectacle, the bipartisan spectacle in Congress. We've had a failed energy policy in the United States of America since before 1973. And it's just pathetic to watch people like Senator Schumer and Senator Rockefeller and others play to the populist theater thinking that they're actually winning the game. They're missing the point here.
What's the point?
The point is that America is addicted to petroleum and natural gas. We consume per capita far more than any other significant economy in the world of those essential ingredients. And unfortunately, we have to source the bulk of them from volatile portions of the world where our foreign policy is not exactly helping us. So, if we wanted to get serious and have a grown-up discussion about energy policy, we would engage the public on the facts. Exactly how much of our energy do we procure from foreign sources? What are our realistic alternatives? How long will it take us
Well, let's find out. Let's bring
place?
John into this. You know a lot about what's going on in the energy markets. I mean, how dependent are we on foreign sources of oil? And let's also make clear, we depend on Canada and on Mexico and on Venezuela as well as Nigeria for a lot of our imported oil.
That's very true. But I actually do agree with Charles. We are addicted to crude oil, and I think whoever says otherwise is completely mistaken. mistaken. And I think that the Canadian oil sands, we keep talking as that as a security blanket for domestic supply, but that's extremely dirty as well. You know, you and I had made a...
But this was an issue having to do with tax breaks that have been extended to the oil industry. That's what they were testifying on.
But it comes from the powers that be. And I think that the powers that be have had it wrong since the Obama administration took the oath. I think that we've talked about alternative energy sources. We still haven't seen a lot of these new methods with solar, wind come into power. I actually just recently spent a lot of time on electric car research, and I just recently, last night, was at the Manhattan Chamber of Commerce and had the executives of Tesla, the auto company, and fascinated by the electric car. Why aren't we embracing more of these technologies?
Yeah, but Tesla is actually getting government subsidies and government grants in order to develop the electric car.
One of their biggest investors is Toyota, which is a foreign company. So why aren't we seeing more of that research being developed in-house? I mean, you look at
yeah, but the U.S. government cannot necessarily direct.
Why don't they give subsidies? If they made it more easier.
They do give subsidies. The U.S. government has also put out grant money in order to.
The oil companies are the ones benefiting the most.
So you disagree with John Watson, the chief executive of Chevron, when he goes up before Congress and says, don't mess with these subsidies for the oil agency?
It's funny because every time they talk about subsidies, which then demand tends to rise because people get frantic, but supply ends up changing. We've seen it for years, since 1976 with the refinery companies. Just we talked about hurricane season, they just happen to produce a little bit less at the most opportune times as prices rise. I think the industry needs to be completely evaluated. And as we talk about next week with Exxon, Exxon to me is one of the largest hedge funds in the world. They need to be regulated, and I think that to the point of our addiction needs to be taken away from that. Why don't we develop alternative energy sources that we could use today? And I'm traveling tomorrow to China, and they're beating us to every which way alternative energies are embraced. And I can't understand why we keep talking about nuclear energy, that we can't move forward. Fukushima was something that happened because of natural causes. If we move away from the nuclear story in this country, I think that we have a great possibility to see $200 crude oil.
All right, well, let's just focus a little bit more on the oil industry, because, Charles, I want to understand this. Do you agree with John Watson and his testimony today talking about tax breaks that have been made especially for the oil companies?
Well, I think if you look at the entire food chain for oil and gas, oil and gas companies generate enormous tax revenues up and down the chain. When they purchase the leases, there's revenue for the local governments and for the federal government if they're offshore. At every step up and down the food chain, they throw off tremendous amounts of tax revenue. In addition, they employ a lot of people. And those employees generate directly tax revenue, indirectly tax revenue. And what I think the real problem that Congress has is they fail to see this is a long-term investment. You don't just write a check for $1 billion and get a return next week in the energy business.
Yeah, but this is what President Obama has been saying when he talks about energy policy. He talks about renewable energy sources. He has been saying that this is a long-term problem and that we need to put in place policies that will bear fruit not in 3 months or in 1 year, but in the decades to come.
No, I agree that private enterprise needs to think that through very, very carefully. I'm talking about your traditional old-style oil and gas investments are multi-year investments. You put money up hoping to get a return over 20, 30, 50 years. If the rules of the game are constantly changing, as they are in this country, and as they have really since January of 2009, becoming radically more anti-wealth and anti-capitalist,
yeah, but
you're going to scare
let's just stick with oil. I mean, the anti-capitalist, that has to do with tax policies and other issues, but I just want to know, do you think that the tax benefits that have been extended to the oil industry, should they be repealed?
No, not at all.
Do you think that they will continue to help the oil companies dig for fossil fuel or renewable energy?
I think if we have an immediate problem in this country, and that is if we hope that the economy is going to roar back, we are starved for oil. We are starved for gas. We've got to get it out of the ground. We've got to get it to the consumer as quickly as possible.
I want to give you the last word, John.
Yeah, I actually think that these subsidies should be really looked at, because I think if the more we keep them in place, the more we're going to be addicted to oil. I think that if we encourage the oil companies to explore for new sources of energy outside of crude oil, I think that that's the way to be in the future.
We got to leave it there. John Licata, thank you very much. Charles Ortel, thank you very much for your participation.